Get ready because the news cycle is absolutely exploding, and we've got the inside track on what you need to know. This is Bitcoin Bulletin, and if you're not plugged in, you're missing out on the biggest shifts happening right now. We're diving headfirst into a rapid-fire update that's going to change how you see everything. You've got to stay ahead of the curve, and that's exactly what we're here to do. We're talking about the established players and the disruptive newcomers, all making waves in the financial universe. Get ready to have your mind blown as we break down the critical developments shaping our future. Don't blink, because the next big move could be happening as we speak, and you'll want to be the first to know. We've got the intel, the insights, and the energy to bring you up to speed on the stories that matter most. We're examining what makes an asset truly safe and how traditional store-of-value contenders are squaring off against cutting-edge digital alternatives. Is the reign of the old guard coming to an end, or is it just getting a digital makeover? And we're also looking at some serious strategic reassessments, with deep dives into market valuations and the shifting tides of institutional interest. You don't want to miss this. Hit that subscribe button and ring the bell so you're always in the loop. Member sign-in is the key. Access granted. The critical gateway to participation has been unlocked. This isn't just about logging in, it's about the fundamental mechanics of engagement and what it means for the broader ecosystem. Think of it as the digital handshake that opens up a world of possibilities, a crucial step in validating presence and enabling interaction within a dynamic network. The implications are far-reaching, touching upon user experience, security protocols, and the very architecture of digital communities. When a platform streamlines its sign-in process, it's not merely a technical update. It's an invitation, a deliberate move to lower barriers and foster a more inclusive environment. This can lead to increased participation, richer data insights, and a more vibrant, interconnected user base. The efficiency and security of this initial step are paramount, setting the tone for all subsequent interactions. It's the first impression, the crucial first step in building trust and facilitating seamless engagement. The focus here is on creating an experience that is not only functional but also intuitive and secure, ensuring that users feel confident and empowered from the moment they arrive. This attention to the foundational elements of user access speaks volumes about the platform's commitment to growth and user satisfaction, paving the way for deeper engagement and a stronger community. But what happens when the established safe havens are challenged by digital disruptors? Prepare for a deep dive into a fascinating comparison that could redefine your investment strategy. Gold versus Bitcoin, the ultimate safe haven showdown. The age-old question of where to park your wealth in uncertain times has a new contender. Gold, the undisputed champion of value preservation for millennia, is facing a serious challenge from the digital frontier, specifically Bitcoin and its tokenized counterpart. This isn't just a theoretical debate, it's a fundamental reevaluation of what constitutes a secure asset in a rapidly evolving financial world. For generations, gold has been the go-to refuge during market turmoil, its price historically rising as stocks tumble. Think of the 2008 financial crisis or the initial shockwaves of the COVID-19 pandemic, periods where gold proved its mettle as a stable, albeit sometimes slowly appreciating, asset. Its strengths are well documented. It's highly liquid with globally recognized pricing, its mining is costly and limits new supply, demand is perennial from jewelry to industrial uses and central bank reserves, and it's virtually indestructible. These qualities have cemented its reputation as the ultimate safe haven. However, recent market behavior has introduced a wrinkle. Gold has, at times, moved in tandem with stocks during recent scares, questioning its traditional inverse relationship with broader markets. This is where tokenized gold enters the arena. By creating digital tokens backed by physical gold stored in secure vaults, this innovation aims to marry the tangible security of gold with the efficiency of digital assets. Tokenized gold promises 24/7 trading, fractional ownership, and reduced transaction costs by cutting out intermediaries, all recorded on a transparent blockchain. Yet, this digital wrapper isn't without its own set of risks. The regulatory landscape for digital assets is still nascent and varies significantly by jurisdiction. Crucially, investors are reliant on the integrity and security of the issuing company and the platforms they operate on, which are vulnerable to hacks and operational failures. Then there's Bitcoin, which doesn't aim to improve on gold but offers a fundamentally different philosophy of security. Proponents hail it as the ultimate store of value for the digital age, citing its decentralized nature, meaning no single entity controls it, and its mathematically fixed supply cap of 21 million coins, immune to inflation. Its borderless and easily transferable nature makes it accessible globally. However, Bitcoin's primary hurdle remains its notorious price volatility. Extreme, sudden price swings undermine its claim to stability, and in recent downturns, it is often correlated with risky tech stocks rather than acting as a safe harbor. Its relatively short history, compared to gold's millennia, means its behavior during prolonged economic downturns is largely untested. The very definition of financial safety is being contested, with gold's traditional dominance challenged by the digital revolution, each offering unique benefits and inherent risks. As the debate over safe havens heats up, a critical look at Bitcoin's internal market dynamics reveals a surprising picture of its leverage and institutional investor sentiment. We're about to dissect what's really going on under the hood. Bitcoin's leverage tightrope and the Ethereum pivot. In the intricate world of digital finance, the stability of major cryptocurrencies often hinges on complex leverage mechanisms and the shifting allegiances of institutional investors. Recent analyses are pointing towards a critical reassessment of Bitcoin's market position, particularly concerning its leverage dynamics, while simultaneously highlighting a significant institutional migration towards Ethereum. This strategic shift suggests a potential rebalancing of power and influence within the cryptocurrency ecosystem, driven by evolving risk assessments and the pursuit of different technological and financial opportunities. Understanding the fragility of Bitcoin's leverage is crucial. It refers to the amount of borrowed capital used to amplify potential gains, but it equally magnifies potential losses. High leverage can create a precarious environment where even minor price corrections can trigger cascading liquidations, leading to sharp, downward price spirals. Reports indicate that despite Bitcoin's foundational strength, its leverage levels have reached a point where they could be considered a significant vulnerability. This heightened leverage makes the asset susceptible to amplified volatility, potentially deterring risk-averse institutional players who prioritize capital preservation. The market is watching closely to see if these leverage levels can be managed, or if they pose an imminent threat to Bitcoin's price stability. Concurrently, a notable trend is emerging. Institutional investors, those large entities like hedge funds, asset managers, and corporations, appear to be increasingly allocating capital towards Ethereum. This move is likely influenced by several factors. Ethereum's ongoing development, particularly its transition to more energy-efficient consensus mechanisms and its robust smart contract capabilities, positions it as a platform for innovation in decentralized finance, DeFi, non-fungible tokens, NFTs, and beyond. Institutions may be viewing Ethereum not just as a cryptocurrency, but as a foundational technology for future digital economies. Furthermore, the perceived risks associated with Bitcoin's leverage might be pushing these sophisticated investors towards assets they deem more stable or offering clearer growth pathways. This institutional flight to Ethereum, if sustained, could have profound implications for both networks, potentially increasing demand and perceived legitimacy for Ethereum while casting a shadow of doubt on Bitcoin's appeal as a long-term, stable store of value for large capital allocators. The narrative is shifting, and the market is adapting, leading to strategic reassessments that could reshape the digital asset landscape for years to come. But what about the underlying value of Bitcoin itself? Is there a hidden opportunity for those looking at the long game, even amidst these shifting institutional tides? Bitcoin's deep discount, a value investor's dream. In the often volatile world of digital assets, identifying genuine value can be a challenging yet rewarding endeavor. Current market analyses are suggesting that Bitcoin might be trading at a significant discount to its intrinsic fair value, presenting a compelling entry point for long-term investors. This perspective challenges the prevailing sentiment of volatility and risk, instead focusing on the fundamental strengths and future potential of the pioneering cryptocurrency. The concept of fair value, in the context of Bitcoin, is complex, often debated by analysts who employ various valuation models, from network effects and transaction fees to scarcity and adoption rates. However, a consensus is beginning to form among a segment of the investment community that the current market price does not fully reflect Bitcoin's long-term growth trajectory and its established position as a digital store of value. This deep discount suggests that market sentiment may be overly focused on short-term price fluctuations, neglecting the underlying technological advancements, increasing adoption by both retail and institutional players, and its growing role in a diversified investment portfolio. For investors who believe in Bitcoin's disruptive potential and its enduring appeal as digital gold, this period could represent a strategic opportunity to acquire assets at a favorable price point. Factors contributing to this perceived discount could include broader macroeconomic uncertainties that impact all risk assets, regulatory overhangs in certain jurisdictions, or simply the cyclical nature of cryptocurrency markets. However, proponents of this discount thesis argue that these short-term headwinds are temporary and do not diminish Bitcoin's core value proposition. They point to the increasing hash rate securing the network, the continuous development of Layer 2 solutions enhancing scalability, and the growing acceptance of Bitcoin as a legitimate asset class by major financial institutions as evidence of its long-term viability. For the patient investor, accumulating Bitcoin during periods of undervaluation, much like one might buy stocks during a market dip, could yield substantial returns as the market eventually recognizes its true worth. This strategic approach requires a long-term vision, a tolerance for short-term volatility, and a deep understanding of Bitcoin's unique characteristics as a decentralized, scarce, and increasingly global digital asset. The opportunity lies in looking beyond the daily price charts and focusing on the fundamental growth drivers that position Bitcoin as a potentially transformative investment for the future. So, we've covered the critical sign-in mechanics, the safe haven showdown, and the strategic shifts in institutional investment. What's the takeaway from all this seismic activity? All right, let's do a lightning recap. We saw the critical importance of member sign-ins, explored the epic battle between gold and Bitcoin as safe havens, analyzed Bitcoin's leverage and the institutional shift to Ethereum, and identified a potential deep discount opportunity for long-term Bitcoin investors. Don't miss out on any of these crucial updates. Make sure you're subscribed to Bitcoin Bulletin, hit that notification bell, like this video, share it with your network, and follow us on all our social channels for even more exclusive content. Your support fuels our mission to keep you informed and ahead of the curve.